So Dylan, for those that may not know, what is capital allocation?
Yeah, capital allocation is basically how a company decides to divvy up their financial resources. And the goal, of course, being to maximize value for shareholders. So it might be unfamiliar as an umbrella term for some people. Investors will generally recognize the different actions business can take, though. So, like, you think about things like share repurchases, initiating a dividend or growing that dividend, plowing money into research and development, purchasing new property and equipment, making an acquisition, something like that. These are all types of things that play into the idea of how a company allocates its capital.
And obviously, it requires making a judgment as to future returns for any of those initiatives. And there needs to be a hurdle, and all that stuff needs to be done. How would you say, just for the layman, a business should make those decisions given where they are in their business cycle or anything like that?
Yeah, I think
where they are.
The things that are most predictable, and I think probably the things you hear about the most as an investor, are repurchase programs and dividend payments. It's really hard to anticipate something like an acquisition. Research and development is obviously kind of this ongoing thing behind the scenes, and you don't get a ton of insight into it. So those are the two that really stand out. And for those two, I think it really depends on the business profile. So you have your high growth company. They're in a phase where they're plowing money into R&D. They're trying to build out maybe Salesforce to better sell their products, grow the top line. They're going to be looking to hold on to their capital, push it into different types of innovation.
Because theoretically, the money that could be made with their fast-growing operations and forming out a niche market is better than paying out a dividend to shareholders or something.
Exactly. Like if you're growing your top line at 30%, something like that, you shouldn't be passing along a 3% dividend yield to investors. The money is much better spent investing it internally and just growing that engine. And typically, these are going to be your mid, small cap companies. They also tend to have your less stable cash flows, right? I mean, you don't want to be committing to...
Or lack thereof.
Yes. You don't want to be committing to a dividend program in particular, because once you initiate something like that, game on. Like, people are expecting it all the time. Or even just announcing share repurchases, if you don't have the money set aside to continue to grow your business and also handle those other operations.